All right, once again, we're going to be talking about technical analysis, chart reading. That's what you do. Mostly for option traders here and stock traders too. If you want to get a leg up in the market, if you want to become a better trader, you have to learn how to read the stock charts, especially if you're going to be an options trader, because you can't just trade options out of the blue, just decide that you're going to want to trade options. You have to trade options on a specific stock or an underlying security. And in order to make money with those option contracts, you have to have an idea of where the stock might be going to. And how do you do that? By looking at the stock charts and doing your technical analysis. That's what we do. That's what we do in these videos. I've been doing this for over 30 years. I make these free videos for the trading community. We're all trying to help each other out. So I'm going to show you once again, like I do most Saturdays or most weekends, I make these videos, I show you my charts, I show you my setups, I show you what indicators that I use to help you become a better trader. And we're going to look at some charts, we're going to look at some individual stocks, we're going to look at the index, we're going to see where stocks have been going, where they might be going, and how to pinpoint, higher probability setups for you to get in and out of a trade. Especially if you're an options trader, you have to know, you have to have an idea of what the stock's going to do or not do, because you can't make money any other way. All right, so let's just jump right in and start taking a look at some charts here. All right, everyone, Lee Lowell here from smartoptionseller.com. What I typically like to do here is we always start with the indexes. We start with the S&P 500 because that is the best overall gauge of the market as a whole. And we look at the SPY. Right here, top left corner is the symbol. The SPY is the exchange traded fund for the S&P 500. So we always look to that chart first. Now, if you're a follower of the markets, then you know this past week, the S&P 500 hit an all-time new high. All-time new highs, not just in the last year, last week, last month, but of all time, okay? So before I go on, let me just explain to you what you're seeing. For those that are new here, let me show you what my charts are all about. Up here in this section, this is the price action. Okay, this is the price of the SPY. And each one of these vertical lines is 1 day's worth of trading. We look at daily bar charts, open, high, low, close bars. These are not candlestick charts. Some people like to trade candlestick charts, okay? And this is about a 2-year look back on my screen here, depending on the size of your monitor. Your charts might go back further than that or less than that, but this is about a 2-year look back period. And what you'll see here is 3 colored lines. We got a blue line here, we got a red line here, and a green line here. That's the 20-day, 50-day, 200-day, all simple moving averages. Not exponential, but simple. Down here, we have the RSI indicator. Right here, you can see RSI 14-day look back period, and it's an oscillator, and it oscillates between overbought and oversold levels based on the price action up here. And we have the 80 level set as the overbought, and the 20 level down here set as the oversold. And you can change those to whatever you want. I use the 80 and 20. And these blue channels here are hand drawn by me to let me know which way a stock is trending. The most important thing in the stock market is the trend. And you will always hear the phrase, the trend is your friend. Stocks trend. They move in certain directions, and it's good to have a visual to let you know which way they're moving, because that way you can buy and sell within the channel. Okay, and the only time a trend's going to change is when something comes along and pushes it to move it in another direction. Right down here, so we had the uptrend that got hit with a downtrend. Okay, most of 2022, stock market was in a downtrend. You can see the downtrend until it wasn't a downtrend anymore, and it started with an uptrend. So you use these channels to help you decide and see which way a stock is trending. And if you can get on board to a trend while it's happening, that's the best way to make money. So you need to see which way a stock is moving. If you're going to trade options, you have to know which way a stock is moving. So we like to see what's been happening and try to make a guess of what may be coming forward. And how do we do that? Based on patterns, based on indicators, and just by me personally looking at hundreds of thousands of charts over the last 30 years, you will see lots of things repeat themselves over and over again. you got channels, you got triangle patterns, you got so many things that will repeat. Double tops, triple bottoms, all these things, ascending triangles, bull flags, all these patterns will repeat over time. Now, what the S&P 500 did right here, it broke out to all-time new highs. Now, we had the resistance here. So some people thought that maybe we're making a double top. You got a top here, top here. Usually double tops are resistance where the stock would get knocked back down. But for right now, we had 3 good days of price action above the resistance, which leads me to believe that it was able to push through the resistance, and most likely we're going to keep going higher. Now, what happened was we had this all-time new high here first back in early April, had this pretty good sell-off. People getting pretty scared here. Whenever there's sell-offs in the market, that's when you'll hear the doom and gloomers will always come out and say, this is the top. We're never going to go any higher. The economy's falling apart. Everything's going to crap. We got wars and pandemics, and the stock market's never going to go up again. But then it just turns around and goes higher again. The stock market will always go up over time in the long run. On the short term, anything could happen in the short term. You'll always have pullbacks. That's inevitable. And it's also healthy for the market to have pullbacks. But over the long run, the market will go up over time. Let's look at the long-term monthly chart of the stock market in general. Over time, it goes higher. So you want to give yourself enough years to be right. If you want to have your passive investing for retirement, stick with it for the long run. The market goes up over time. And the reason why that is because the market is made up of profitable companies that create products that people buy, so the companies keep making more and more money over time. And if a company's profitable over the time, the stock chart has to go up. So if you want to take a long-term view, bullish in the long run. But in the short term, anything could happen. But for right now, the S&P 500 has made all-time new highs, and it probably looks to keep going higher. No matter what else is going on in the world, you'll get the blips, you'll get the downside blips like you had right here, and then it just gets bought up again. All right, let's look at the NASDAQ. We go to the triple Qs. NASDAQ also all-time new highs, and we can pull back to the monthly chart, which will give us the longer range. So you can see right here, all-time new highs just made last week. Same thing with the Dow Jones. We look at the diamonds, the DIA, that's the exchange traded fund symbol for the Dow Industrials. You can always look up here in the left-hand corner. That is the symbol. So if my chart would load up here, we can see. And I know the Dow crossed the 40,000 point level for the very first time last week. So you can see right here, the diamonds closed 399.95, just under 400. Everything's a fraction. The exchange traded funds trade at a fraction of the level of the actual index. Okay, so it's hovering just under 400 here for the diamonds, but all-time new highs. So you can also see the moving averages all sloping upwards. So the slope of the moving averages is very important. That just tells you that everything's in an uptrend, and you can just see we got a nice uptrend going here. And you can use the pullback sometimes as your areas of potentially getting in for the next leg longer, the next bull run, okay? So the indexes look good. There's really nothing out there on the horizon that's going to cause major setbacks. We all know what's going on in the world. We have wars going on, yes, but that's a known factor. Inflation, although coming down, still a little high. Interest rates here in the U.S. at least are still on the high side, but that's a known factor. There's no surprises out there. And when there's no surprises, companies are going to keep going along, making their products, making profitable products. People are going to keep paying money to buy these things. So stock prices keep going up. All right, so let's take a look at some individual stocks, try to get a gauge of what's coming forward. So you got to put in the work. You got to see what's happening. So let's take a look at some stock charts here. Let's start with NVIDIA, because NVIDIA is a big one. They have earnings coming out this week on Wednesday, May 22nd, after the market closes. So everyone's got an eye on NVIDIA to see what's going to happen there. NVIDIA has just been a monster. just been going up, 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 up. But we've had this kind of sideways action here for the last 2 months or so. And everyone's waiting for earnings. So there's not going to be a lot of activity with NVIDIA this week until after earnings on Wednesday, May 22nd. So they'll probably get some more sideways action here. But, it's just been a good stock to be long. You can see here, so we had this, we'll draw the channel here. And what happens is when a stock's in a channel for a very long period of time like this, it bounces within the channel, and it's storing up energy that's going to blast through one side or the other. And in this case, it blasted through to the upside. And look how strong it moved. It had all this energy trying to figure out which way to go. And then when it finally blasts through, it really goes. Okay, so use these patterns to help you gauge how things are going to work out. Now, in the description below the video here, I've got a couple books on simple technical analysis reading. They're thin little books. You can get them on Amazon. I've got the links listed down below, so you want to take a look there if you want to get a handle on some easy learning of how to do technical analysis, looking at patterns. It will greatly help your trading in the long run. All right, so this is NVIDIA. Let's take a look at Tesla. There's so many Tesla bulls out there, but Tesla still, to me, is always an ugly chart. If you watch my prior videos, I always say the same thing. Tesla is a hard one to trade. It is just very ugly looking. It's hard to really get a gauge, but we drew the long-term support here around 160. It popped down below for a very short period of time, but then popped back up. But you've got the moving averages kind of converging on each other. It's right at the bottom edge of this channel. It's trying to make its move higher, but it can't really go anywhere. So we have nothing going on with Tesla in our newsletters. We've got nothing happening. And speaking of our newsletters, what we do here at the Smart Option Sellers, we're all about selling options. We sell put options. We sell put option credit spreads. We take a bullish slant in the market and we use bullishly slanted options trade. If you want to know a little bit more about what selling put options is all about, if you've never heard about selling put options, go to our website, smartoptionseller.com. Click on our free ebook here. Get our free Put Selling Basics ebook. You can scroll down, put your name in the box here, and we'll send you an email with a free copy. We have our services tab right here. It tells you some newsletters that we run, our coaching, and we also have our put selling video series. If you want to go a little bit deeper than just the free ebook, take a look at our put selling video series. All right, let's go back to the charts here. Let's take a look at Apple. Now, we do have a trade going on in Apple right now in one of our newsletters, bullish trade. So it's been working out for us at the moment. Apple has kind of been stuck in this longer term channel here. You can see like 170 to 200, been bouncing around that range for a while. It was hovering on the support right around 170. So if you were thinking that you might want to get bullish on Apple, you're just waiting for a move for it to bounce pretty convincingly off the support. And it had its earnings come out a little while ago, and you can see the gap up here. Here's where it closed one day, and then it opened up here the next day. That's called a gap up. So it's been just going up since. So what we're really waiting for is to see Apple break out above the $200 resistance area. And I like to see that happen. We don't know when it's going to happen. We can see it maybe trade sideways, a little higher, then maybe, who knows, a month or so, 2 months from now, maybe it'll blast through. The timing is very hard. If you're an option buyer, timing is very hard to do, because when you're an option buyer, whether you buy call options or whether you buy put options, every option has an expiration date. So if the stock doesn't make the move that you need by the expiration date, your option will expire worthless and you will lose your investment. That is why we like to sell put options, or we like to sell options in general, because getting all the direction and the timing right in the same trade isn't necessary to win when you sell options. Higher probabilities to win when you're an option seller. And you will learn that if you get our free ebook on selling put options. So that's why we like to sell options, because it takes away the burden of trying to figure out the where and the when of the stock move. Okay, so Apple, getting back to being a strong stock. Want to see it get above 200 at some time in the future. Let's take a look at Costco. Great company. I have a couple students with me of late that we've been looking at stock charts and we've been keying in on Costco here. I was hitting the double top here. Costco, great company, and it blasted through. So we got a couple days so far getting above resistance. I'd like to see maybe another 1 or 2 days staying above the resistance before I can convincingly say, okay, we've got a bullish trade here. But Costco, it looks good, blasted through, looks like it wants to keep going. Are we a little overbought? Potentially. So we may have a little sideways action here, maybe a little bit of action right on the line before it starts to move higher again. And this is all-time new highs, I believe, for Costco. Yep. Great company. So looking good there. Let's take a look at Amazon. Amazon is creating what we call the ascending triangle here. Wait for this price action to fill in here. So the ascending triangle is when you have the upwards price movement, but you have some resistance. So you can draw the line, the uptrending line here, and you have the flat top resistance. This is called the ascending triangle here. And what's going to eventually happen is, Amazon should be trading tighter and tighter into this remaining triangle area, and then eventually push through to the upside. If it fails, it's going to drop down below the line here, drop down here, and then it will have to start the process all over again. But for right now, we're thinking it's going to remain in this little upwards triangle and then blast through. So we're keeping an eye on Amazon for the potential blast off there. Let's take a look at SMCI, another biggie that people have been following. I had some Fibonacci retracements on here that I was teaching my students of late. Fibonacci, if some of you know about Fibonacci, it's the mathematical equations of retracements. So if you have a really big move like this, in most cases, price action will retrace at least 50% of that move. 50% to 61.8% are the two big numbers in Fibonacci land. Okay, so you can see SMCI had this big move, and then it retraced right back down to the 50% and 61.8% area. You can see the level right here, hit this one day right here, and then it starts to move up again. So keep an eye on SMCI. It's a big mover, very expensive stock. For those of you who are in the meme stocks, we know that GameStop had a move last week. The guy who talks it up on Reddit and Twitter, and I don't even know what his name is, got back in the game last week, started talking about GameStop again, and went up to $65 a share and has fallen all the way back, got under $20. So just be careful out there. I know it's really tempting to follow people on social media, but what's that going to do for you? Is it really going to stay up at $65 a share? Yeah, have a plan if you're going to trade these kinds of things, because everyone buying between $60 and $65, look, what are they going to do now? They just lost a lot of money. So be careful when you're trading these things. And even AMC got a little bit on the price action. It's a very low stock, but let me open this up a bit so you can see what happened here. Open it up a little bit more. So it was down at about $3 a share. It jumped all the way up to 12, and now it's come all the way back down to 4 and change. So be careful. All right, those are some of the meme stocks. I know it could be fun and exciting to do that, but you know what? Okay, let's see. Microsoft starting to look again. I've been saying Microsoft is one of my favorite looking bullish charts. Had that pullback along with the rest of the market of late, but has now bounced back again. So Microsoft still looking pretty good. Netflix is also a strong stock. Had the pullback on their earnings, but has rallied back up again. So it's hard to keep these stocks down for long periods of time. If you want to be bullish, you got to make these quick decisions sometimes, and look how it just powers higher. All these stocks are in uptrends. You can use the pullbacks as your higher probability entry points or timing points. They move along with the moving averages. They hug along the moving averages. They pull back. They're going to usually pull back to an area of support. Just learn how to read the charts, look at the patterns, use your indicators to help you decide when is it better to get in or out of a trade. Netflix, let's see what else we have. Walmart, strong stock, had earnings, all-time highs for Walmart. Yep, all-time highs for Walmart. You can't keep the good stocks down. You can't keep the good companies down. Look at Walmart. Had just, if there was ever areas of support where it would be good to get in on the 200-day moving average, even though it fell through a little bit, it's not going to stay down there for long. Use the moving averages as your guide to help you decide when to get in a trade. What else? I'm going through the charts here. This is how you do it. There's manual labor involved. You got to put in the work. You got to look at the charts. You got to do your research. Nike coming down to potential support, right? A little under $90 a share. You draw the lines. How do you decide where the support is? You got to look back in time. You have to go backwards and see where there was congestions of price action. We can see in the high 80s, there's a lot of congestion. Here, this was in October of 2022, here in October of 2023, and then April of 2024. It seems to be the high 80s is a potential area where Nike does not want to fall below. So we're getting close to that area again. If it gets a little bit closer to the support line and bounces again, then you have a higher probability bullish trade setting up here. So draw your areas of support and resistance and use that as a potential launching pad for the next trade. Google, looking good. Been showing my students how Google has the W pattern. You can see the W pattern right here. W patterns are typically bullish, and here is the resistance line. And typically how a W pattern works is once the price action starts forming the second leg of the W, if the price action gets above the middle part of the W, it typically tends to keep going. Okay, so it's already blasted through the resistance, and so Google probably just going to keep going higher. All right, so learn about some of the patterns. What else? Meta, okay, it's bouncing back from its earnings. Let's see, what else? What else do we have? Coca-Cola. Where's my Coca-Cola? Here, looking okay. Pepsi was also looking okay too. Let's see, Pepsi. So let's look at the pattern we've drawn. So Pepsi's been this uptrend here, had been going sideways for a while. So Pepsi's a great company. Let's look at the long-term chart of Pepsi. You always want to go out to the long-term chart as well. Look at this. I mean, if you want to talk about a beautiful chart over the long run, Pepsi. And look how it just bounces right off. This is the 50-month moving average. Just bounces so beautifully off of that. So don't be afraid to look at your weekly charts, monthly charts, daily charts to really get a gauge of a longer term trajectory. And then you can, then you draw the channels. Okay. So Pepsi's now coming up upon the upper edge of the channel here. More than likely, I'm not going to say 100%, but more than likely, the next move is probably going to be somewhat of a down move. Maybe it'll come connecting to the 20-day moving average here. The price action will come down, the moving average will move up, and wherever they intersect could be the next launching spot for the next leg higher. Okay? Just takes time. All you have to do is look at lots and lots of charts over time, and you'll become a pro at it. Adobe. In the downtrend here, but starting to possibly find some sideways bottoming action. Okay, so there's nothing really here for us to do yet. If you want to be a bull, you got to wait for the confirmed uptrend to start. Right now, it's probably, you can see it's getting a little bit of a rounded bottom here, trying to find its legs and trying to find that support for the next move higher. So keep that on hold. There's not always going to be a trade. Sometimes there's just nothing to do. Don't be upset with that. I know everybody wants the action. They want to do stuff. But if the chart's not showing you anything, don't force it. Don't put your money down where there's no potential for a payoff. Let's see what else. What else? Hormel has been showing me this potential bullish pattern right here. You got the triangle, the upsloping with the flat top, starting to break through just this past Thursday and Friday, May 16th, May 17th, starting to break out. Keep an eye on Hormel. It's been coming down a long way. Here, let's do this again. Has come down a long way, but is showing a bullish pattern. Keep an eye on Hormel. If you want to take a little bit of a front run here and get in, Hormel's a cheap stock, $36. Maybe you buy a couple shares, or maybe you buy a call option or something, because Hormel is starting to break out and it could start to make the run higher to, where would the next point be? Probably between, I'd say, $40, somewhere in this range right here could be the next spot where it could trend to. So we can just draw a little, mark it up a little bit here. Okay. So here was a lot of congestion. So if it breaks out, maybe it'll move up to $40 a share. I know that's not a big move, but at least you can test your theories of whether these patterns will play out. So keep an eye on Hormel. Let's shut this thing down here. And is there any other stocks of note? Let's see. AMD starting to come back a little bit. Had the support, but it broke. But there was the 200-day moving average lurking down below. Rallied back, but it's finding some resistance at this down sloping 50-day moving average. So it got knocked back down a little bit here. The moving averages typically act as magnets. So what we really need to see for a bullish AMD position is it's got to convincingly get above the down sloping 50-day moving average and then power higher. Okay, so keep an eye on AMD if you want potential bullish action. IBM's right here. Let's make this our last chart. So IBM trying to find a bottom. See how it connected this day right here, connected right on the 200-day moving average. And it found support here, and the last time it was getting down to the 200-day moving average. So potential launching pad bullish for IBM is lurking down here. Now you can see the 50-day and the 20-day are still down sloping, but the longer term 200-day is still sloping upwards. IBM trying to find a bottom here. So keep an eye on that and possible trade in the near future. All right. I think that's it. All right. I hope this has been helpful to everybody. Use your charts. You got to put in the time. You got to put in the effort. You got to put in the work. There's work involved. I mean, if you want success, you got to put in the effort. I hope this has been helpful. If it has, leave me a comment. Give me a thumbs up. Don't forget to subscribe to this channel. I want to help everyone and make these free videos for the trading community. Let's all help each other out. As I said, down in the description below is some links, some software, some websites, some books, things that could help you become a better trader. Also on the screen, I'm going to put a video of all about selling put options, because that's what we do. So I want you to learn more about selling put options. All right, that's all for today. Hope everyone has a great week ahead, and I will see everyone the next time. This is Lee Lowell signing off.